Most traders are just looking to trade reversals, but some of the easiest, most high probability trades you can take are continuations, especially when the market is bullish and printing all-time highs. This is an easy 3R trade that played out perfectly on silver. Let's take a look at exactly how you could have executed this trade. So this is the 12-hour price chart. Price is fractal, so just take this as an example, but we are swing trading. 12-hour execution in line with weekly, 2-weekly, and monthly candle closures. So first thing I want to do is look at what the higher time frames are printing in order to frame my trade. So let me overlay the weekly candle. We have a bullish weekly close. What happens next? Well, we get this consolidation. Price trades basically sideways for an entire week, but crucially, price closes above the previous week's high. So in a bullish market like this, what are we looking for? Price to just keep trading higher. So it's just a case of marking where's your swing point and where is your internal range liquidity. And it's very simple. You see, we get a sell-off towards the end of the week. Price then trades up, closes above the previous week's high, and we are left with a bullish order block, the last sell to buy. And that's our entry. We just mark the high and we are looking to protect the swing point, which is the low of the order block. What do we then do? Will we then mark a 2R, a 3R? It's really down to your own discretion, but you can easily take a 3R trade here and just trail your stop below live price. That is as simple as it can get, especially when you're in extremely bullish markets. If you then see price trading into the previous high and starting to retrace, then you can go back to break even. You're leaving very little on the table by seeing what happens with the next weekly candle. Let me look at another example with Bitcoin. So again, 12-hour price action. I'm going to overlay the weekly candle. And we see this classic accumulation, manipulation, distribution. See price broke above a previous high. This weekly candle broke above, closed inside. So this is a classic weekly AMD. Price then dumps to where? The lower time frame target. So if you were looking to trade a reversal, this is your entry right here. But let's overlay what's happening on the monthly candle. We're sweeping above a previous monthly candle. Price is bearish. We have this target here. So when this weekly candle closes here below the previous low and running the liquidity, it's not sweeping this and reversing, it's running the low. What are we looking for? We're looking for continuations to at least this target. Why? Because these are the monthly lows where external range liquidity is sitting. So let's take the monthly target away and see what we have at the point this weekly candle closes. It's a classic continuation setup. We have the last buy before the sell. This is a bullish candle, price trading away, new price leg, new weekly candle opens, it trades into the internal range liquidity, trying to trap sellers into thinking that price is going long, and then it just dumps. So the entry is at the order block, cover the swing point, and then we're looking for our monthly low. It's a 2.93R trade. And obviously, again, there's nothing stopping you just trailing your stop behind structure, and price absolutely melts. This would have been a 7, 8R trade. That's how to just take easy continuations in the market when you have alignment between weekly candles and higher time frame candles like the monthly, in addition to bullish markets or bearish markets where price is just printing new all-time highs or new all-time lows. This makes up exactly what I teach in my 30-part series on candle range trading. Traditionally, accumulation, manipulation, distribution, but when it makes sense, also continuations. So please study this, subscribe to the channel, and check out those playlists. I'll see you on the next one.